Hi, today we will learn how to pass basic journal entries. Right? Journal entries. So we will learn only journal entries today. To pass journal entries, we should know the rules of debit and credit. These rules of debits and credit you're gonna use in the entire accounts, right? Without these rules of debits and credits, there is no accounts. So we should learn this. Before that, you should know what is asset, what is liability, right? What are liabilities and expenses and income. Okay, so you should know what is asset, what is liability, what is expense, what is income. Assuming that you already know, and also assuming that you can identify what are all the assets, what are all the liabilities, what are all the expense, what are all the income, right? So asset normally shows debit balance. Normally it will show only debit balance. If you want to increase the assets, you need to debit it. If you want to decrease the assets, you need to credit it. And the liabilities, if you liability normally shows credit balance, and if you want to increase the liabilities, you need to credit it. If you want to decrease the liabilities, you need to debit it. For expenses, it's simple. There is no increase or decrease. Expenses normally shows debit balance, and then income normally shows credit balance. Right? So, based on these rules, we'll pass some general entries now. Okay. Okay, general entry 1. Journal entries sold goods to Raj. So whenever in the general entry they mention name, right? That means it's a credit sale. If it is a cash sale, they will tell that we sold goods for cash basis. But if they specifically mention any name and they didn't give anything more than apart from that, then you should consider that as a credit sale, right? So now we will apply our rules of debits and credits for this. Sold goods, nothing but sold goods is what? Sales, right? And then sales means income. Just now we have learned income shows which balance? Credit balance. So we will credit this. And then Raj. Raj is what? Raj is debtor. And debtor is asset. Asset shows debit balance, right? So it's simple that Raj account debit to sales account, right? So we are just, according to this we need to credit it, so we have credited this. According to this we need to debit it, so we have debited this. All right, okay. So let's write another general entry. Sorry, just 1 minute. Okay, let's write another general entry. Purchased goods from Raj. So purchased goods from Raj. Purchased goods, nothing but those are purchases. Purchases is nothing but expenses. Expenses shows which balance? Debit balance. So we will debit the purchases. And then Raj here is creditor, right? Creditor is a liability. Liability shows credit balance, right? And here you can even think that whether liabilities are increasing or decreasing. So here liabilities are increasing, so that's why we need to credit it. Why the liabilities are increasing? Because we are getting so many creditors, right? So we bought goods on borrowed basis, we need to pay to so many people, right? So let's just say previously you need to pay 50,000 creditor. Because of this purchase your creditor balance has been increasing to, let's just say, 80,000, right? So your creditors are increasing from 50,000 to 80,000 because of this transaction. So liability is increasing. If it is increasing, we need to credit it, which you have learned the rules and based on the rules of debits and credits. Okay. And today we will learn about something called as business entity concept. And as well as one of the important thing is, basically you might have seen that we will consider the capital as liability, right? Why do we consider capital as liability? Due to business entity concept. Business entity concept. What does this concept tell? Yeah, according to this concept, business is different and then owner is different. They are not same. Now the owner is giving money to the business, let's just say 50,000. So what do we call this as? We call this as capital, right? Owner is giving capital to the business, which is 50,000. Now what business has to do with that? Business has to do business with that, and if it does a business with that, there are two scenarios will be there. One, there may be a profit or there may be a loss. If the business gets profit, ultimately belongs to the owner only, right? So business will give profits back to the owner, and if the business gets loss, loss also has to be bear by owner only. Now, so we are passing a general entries according to the business point of view, right? So business is liable to pay back to the 50,000, right? So owner gave 50,000 to the business. Owner gave 50,000 capital to the business. Now business, that is not the business money, right? Let's just say instead of in order to avoid confusion, let's write, instead of writing business, let's write ABC Limited. ABC Limited. So owner gave money to the ABC Limited, right? So this is not the, whatever the money gave by the owner, this is not ABC Limited money. ABC Limited is liable to pay back to the owner. So ABC Limited, what it can do with that? It can do a business with that, and either it may generate a profit or loss. Let's just say it generated a profit of 10,000, right? Previously, owner gave 50,000, so ABC Limited is liable to pay back to the owner only 50,000. Now, just because it generated a profit of 10,000, now it has to pay back 60,000 to the owner. So that's why in a balance sheet, we will write capital to the liability side, and also as well as we will add net profit to the capital, right? Okay, now let's just say the company made a loss. Company made a loss of 10,000. So owner contributed 50,000 rupees, and ABC Limited done business with that, but it got a loss. So 10,000. So now company is liable to pay back to the owner is only 40,000, not 50,000, right? So according to the business entity concept, business is different, owner is different. So that's why whatever the money contributed by the owner for the business, it is liability, because it is liable to pay back to the owner. All right. Okay. So what will be the general entry when owner contributes capital to the business? So let's write some general entry. Okay. Now let's just say sorry. Kumar contributed 50,000 to ABC Limited. It's nothing but Kumar gave a capital to ABC Limited 50,000, right? So this 50,000, what do we call it as? We call it as capital, right? So this capital is what? Liability. Liability shows credit balance. And then ABC Limited also, ABC Limited getting cash. The same 50,000 is a capital, and as well as ABC Limited is getting in the form of cash. So cash is an asset, and asset is increasing. So debit it, right? Here liability is increasing because more capital. So if the Kumar contribute 50,000, now business is liable to pay back only 50,000. If the Kumar contribute 20,000 extra, now business is liable to pay back 70,000 back to the Kumar, right? So if the liability is increasing, so we need to credit it. So now general entry will be cash. Let's write here, cash account debit to capital account. So let's think from the ABC Limited point of view. For ABC Limited, cash is increasing 50,000, right? So asset is increasing, so that's why we have debited it. And also for ABC Limited, capital also increasing, that means liability is increasing, so that's why we have credited it, right? So for every general entry, for all the general entries, you can use the rules of debits and credit. So you will never go wrong if you use the rules of debits and credits. Okay, let's pass one more general entry. Okay, so it doesn't work. Hold on, let's try with that. Yeah. Oh. Okay, let's stick to this. ROM deposited cash into bank. ROM deposited cash into bank, right? So let's think from the ROM side. So there are two things involved in this. One is cash, another one is bank. Cash is an asset, and then bank also an asset. For ROM, cash is decreasing, right? So if it is decreasing according to the rules of debit and credit, if the asset is decreasing, we should credit it. And then for ROM again, bank balance is increasing. That means asset is increasing. If the asset is increasing, we need to debit it. So general entry will be bank account debit to cash account. Alright. So you can use the rules of debits and credit for all general entries. So you should know, you should be able to be identified in the transaction what is asset, what is liability, what is expense, what is income. So whenever they give a transaction which they ask you to pass a general entry based on the transaction, first read the transaction carefully and find out what are all the assets, what are all the liabilities and expenses income involved in the transaction, and then pass a general entry, right? You will never go wrong if you follow this. Okay, thank you, and do subscribe to the channel.